Yo, what's up, everybody? Yeah, so something weird's going on this morning. The stream platform I have crashed earlier. It's like critical error or something. I'm like, what are we talking about? What are we talking about? And then the other link, look at this right here. This link right here is showing that it won't engage it when I'm trying to turn the live on. So I had to make another one. So that's what the problem was. I'm still not sure why it's not accepting it, but technology, right? So hopefully everyone finds their way to this one. I think I'll go and delete that other one, to be honest. There's no confusion. Sorry about this. Appreciate the patience. Just go ahead and delete that. Hopefully it doesn't mess this one up. All right, can you guys let me know if you see everything okay, hear everything okay? I hope you guys could see everything okay. Seems like things are struggling this morning. All right, Z, everything's good. The volume and the visual. Can you guys read this in here? Like these little letters. Yeah, okay, beautiful. Yeah, I don't know what the hell's going on. Again, I appreciate the patience. Sometimes this happens, okay? It's the way it is with live calls. So yesterday with my private group, and again, they watch these videos, so if I'm not being truthful, come out and call me out, right? But yesterday when we were live, we called this to go lower, reaching for this August 4th regular trading hours gap to try to fill it. We ended up getting that entirely. Well, not entirely, but close enough. This also made a reaction from this low because it filled in that fair value gap low on the daily chart. So that is a opposing PD array to the downtrend. So we ran through this low, price continued to drop, and then we set up a rejection block down in that low, as you can see here. This right here is what this rejection block looks like from the higher time frame here down to a 15-minute. We call it the market maker buy model. Call the buy model in here. I gave out 2 trades to go to the buy side. Okay. I didn't participate in the first one because I wanted to see how this was going to be treated. But then we ended up, I was able to then get into this. And then I called this as well, 29,260. And price basically ran up into it. And now we've completely filled the inefficiency, as I said it would, live in front of my private group, who again, there's already 2 people here from my private group. So if I'm not telling the truth and we didn't know anything about what was going on, come out and say it, right? But again, a lot of you guys actually got to participate. I know Jen, you were able to participate in something yesterday. It's probably on your own though, to be honest, because you're turning into a superstar. But yeah, so I saw a lot of people saying that yesterday's price delivery was extremely difficult. They've been saying this for months. And most of those people that are saying it's difficult is because they just don't have experience or they just don't know what's going on, right? Especially if they're these big live streamers who are saying, oh, the chop is real, or oh, this is a horrible environment. It's actually not. Every day we find something. You just have to know what you're talking about, right? And here, I hope you guys are walking towards that direction with every new call we do, right? But let me make sure I got everything situated with my broker. Get all my charts up real quick. Again, sorry for the slight delay. It was technical issues not trying to let me win. right? But I think we figured it out. So, okay. So let me just get everything situated. What's up, Tony? Good morning, everybody. So again, hopefully this makes sense. If you guys have any questions about this, just let me know. Again, we have news at 7 a.m. Pacific Standard Time, so it's about an hour and a half. But we'll wait till at least 6:30 before we make any real clear decisions as far as what price should or shouldn't do. For the meantime, though, I'd like to answer any questions if you have any. If you have any thoughts you'd like to share, be happy to hear that as well. On Sunday, we talked about this potential change in state of delivery on the Dow. I said if we get above that, the retracement has now been completely finished. And this is where they're going to stop and then rally. We got daily bullish order block. So it looks like the trendline liquidity is now in the crosshairs. Something obviously that we have to keep in mind is the fact that there was S&T here. There still is. And now we got the S&P and the Nasdaq retracing into the lower levels right here. But again, just like with the Dow, if we can get a change in state of delivery here, I think that we'll be able to get up above. Let me actually move that. Things have changed, obviously, right? Big down candle, created one more punch lower. So now we have our order block here. Okay. And so we'll see what price wants to do in regards to this. I'd like to see it get above this. And if we can, we'll end up seeing price go to the buy side like we talked about and forecasted over the weekend. If it was going to hold these levels. It did dig a little deeper than I wanted it to, right? So beyond the midpoint, we're still respecting this accumulation level that we talked about. Obviously, it was in a market maker buy model, which again, we've talked about ahead of time. So I'm watching to see the relationship price is going to have with this change in state of delivery if we can get above it. If it gets above it and then the next candle trades down into it and then we distribute again, then we'll be in a market maker buy model, and then we'll be pretty set to try to target these upper levels. So this could simply just be a retracement. When you go to the weekly chart, it's a lot less bearish than the lower time frame looks. Right? It just looks like a retracement into that. We are overlapping a lot of ranges. So it could be a bit sketch. We're at the end of the month, and we're going to go into a new quarter going into next month, right? So with that being the case, we got to keep in mind the conditions may start to get a little bit more tricky. There may be more cracks in correlation, which is something very common around the start of a new quarter. And there might be some, chaotic consolidations and whatnot. There's the war in Iran happening. We actually have economic outcast, the operation or whatever. So we'll see what kind of impact that has. Not sure if that's going to have too much of an effect on us in the U.S. I don't know about other countries like China and whoever else that are really close to Iran. They're probably going to have some issues because now they got to buy oil and gas at higher prices, not the super discount that they were getting. So again, I'm not too sure what the impact of that is going to be, but it's something that's happening. So we have to be very cautious of what's going to happen, especially going into this new quarter, also at the end of the month. Okay. And we have some of the bigger news events happening a little bit later during the week. So tomorrow it's going to start the red folder delivery. And then we got Jackson Hole Symposium. Again, if you weren't here on Sunday when I talked about this news event is where a lot of bankers show up and talk about economic policy and all types of stuff. So from ICT's perspective, what he shared about this is you want to look at this as if it's NFP. So most of the trading you do is probably going to be best served in the beginning of the week. Okay. And then once we get to Wednesday, Thursday, Friday, There are red folders, but again, because of this news event, it makes things a little bit chaotic, especially because it's the end of the month, right? And we're going into a new quarter on the 16th of next month. So the week before, week of, week after a new quarter rollover, because there's money changing contracts and repositioning happening, a lot of times that can lead us to a little bit of a chaotic environment. Again, that's not to say for you to go in there and not take any trades. That's not this. Well, I don't encourage you to take any trades because of what I'm saying. I'm not a financial advisor, but this is essentially something that you just got to pay attention to, lower your risk, don't have any fear. There's nothing to fear, right? There's zero things to be scared of. But you got to be self-aware of the condition, okay, and yourself, right? If you struggle in decoupled markets, if you struggle in times where NFP has a reaction, right, and it doesn't have a reaction, right? You just got to be more cautious, okay? That's all it is, right? I mean, there's going to be people that just come in gunslinging every single condition, and they're going to deal with more losses than is necessary, right? But again, this is part of being a trader, conditional situational awareness, and just knowing that not every moment in price is something that you want to push too aggressively in, okay? And this is one of those moments. Obviously, just like in any other condition, we'll be able to find something. But at the same time, that's not at all an encouragement for you to come out here and gunsling on anything that you see. You want to have higher time frame context. Like if this candle here gets above this candle and then we return back into it, that'd be a better contextual idea on the day, whether that happens today or not, than it would be to try to catch it in the middle, right? Now, if this thing just continues to respect this and we get displacement, when we look at this lower time frame 15-minute chart, we have this accumulation level here. So if we can get below that, we could look at that as a potential market maker sell model because we still have a little bit more it can go down into in terms of the regular trading hours gap. With the fact that this thing has went so aggressively to the buy side here, and we've basically covered the whole entire inefficient piece of price delivery, we see that there's really no inefficiencies in here that haven't been overlapped. I'm going to be very confident when we get above this candle, right, the open price, that will continue to go up. But for now, we're kind of in the middle, right? We still have this upper movement, lower movement. That's a completed sell model. So it should be a balanced price range if we're going to be bearish. And then, of course, we got this candle. So if price continues to close below that, you got to be cautious, right? Because you never know. And we do have trendline liquidity. It has been very aggressively going lower. We do have levels down here, obviously, but I'm not going to be super behind these levels until price can potentially get below this rejection block. This rejection block is also going to turn inversion if it gets below it. For now, though, look at what it's done using that rejection block. It's being supported inside of a higher time frame PD array that seems to be holding price, okay, at that lower part of the fair value gap, right? And again, just I want you also to notice how the regular trading hours gaps are being treated, right? I called for this on Sunday as a possibility if it was going to go down into it. Then yesterday, I called this while it was happening to go all the way down into it. And then look what happened. It came all the way down, didn't fill it entirely because there's a lower part of the daily fair value gap that stopped it, basically holding precedence over this. And then I talked about this regular trading hours gap above here. So you can start to see how the importance of the regular trading hours gaps comes into play, right? It can be used to help you navigate whenever there's regular trading hours gaps that are not filled, or it's offered one side or only tapped into a little bit of it, like this. See how it went up and then went down, but it came all the way back up to the tick, filled it, and because it was looking to go down to here, price continued to drop, created another regular trading hours gap, offered only sell side delivery at the start of the day, rallied all the way up to the tick, and then stopped there. And look at the bodies, beautiful respect. And then we got a breaker that formed in here, and then he used that to go deeper and then set up yesterday, right? And then it filled in all of this. So they're all balanced in this area. So there's really not many more regular trading hours gaps to look at that are inefficient. This one up here has a little bit, but the main one I see is up here, right? Because you see how it used it a little bit and then continued to drop. So it's still got that upper part, so I'll keep my attention there. If we do end up breaking highs, for example, especially if we were to get outside of this, which is the fair value gap. Let's actually move that 8-hour down to there. Something we also got to keep tabs on, as we have been, is the dollar. If the dollar ends up breaking lower from this, we'll be showing respect to that fair value gap. We have equal highs up here, but the only reason I would be looking for those to get taken is if we can change day of delivery here, or simply get above the midpoint of this inversion and then respect it and then start racing towards that level. Otherwise, I would like to see this basically respect this and go lower. If that's the case, then that supports this using this previous regular trading hours gap here to then race for the buy side, right? Use it as support. So we got the 50% of this regular trading hours gap. And again, I get questions about this indicator. This is an indicator that one of my students created, and it's part of our private group. But all it's doing is outlining the regular trading hours gaps, new day opening gaps, and new week opening gaps. It's going to continue to evolve because the student that made this is a genius. Shout out Mark. So there'll be more stuff that he'll add to it, and you guys will, be able to have it as part of the private group. So be ready for that. We also have other indicators as well, like SMT indicators, timing indicators for 90-minute cycles, and a bunch of other things that are coming. So yeah, for those that have asked me questions about that from the last 2 weeks, there's your answer. So yeah, with that being said, let me actually make sure I got all the different things that we need. So again, we got the weekly delivery. It looks less bearish than it looks on this. We'll see if that's going to change, but it's going to take some time. Okay. We got this order block here. Price is trading up into it. If it is going to go higher for the S&P, we're going to have to get above this lower level here. Preferably close above this. Right. We got consecutive down candles. The lowest down candle is here. We have a stutter candle, consecutive down candles. The early change in state is going to be if we close above this. But for this larger perspective, the full change in state is going to be above this candle's open price there. And you could see how that is pretty much the bullish order block. Right, we'll just break it down on the 16-hour chart. This quadrant projection here, that's from the weekly fair value gap. As you could see. Actually straighten that out. So we're in that upper 25 to 50%. If this weekly chart was a 5-minute chart, what would you be thinking? Well, until it gets through this fair value gap and breaks through that range, getting below the midpoint, it still has a chance to want to keep going higher. We have a balanced price range here. And we got the likelihood of dollar creating second stage distribution right here in this larger market maker sell model that, again, we've been talking about for much longer than just today, right? It's been the last couple of weeks since price declined like this and inverted this fair value gap. Once it did that, we've just been bearish the whole time. And again, you could go back and look at the videos to confirm whether this is a true statement or not, whether we've been in sync or not. And I think you'll be pleasantly surprised. But yeah, so that's kind of the lay of the land. It's the battlefield, where everything is at so far. If we can get above there. Yeah, so I'm moving this reference to this now. Where's that? Okay, so there's a weekly suspension block there. Okay, so that's what this is. Let me actually look at this. So this is equilibrium of the range. Upper 25. We got the octane level there, octane level there. If you break them down through the middle of the octane levels, you get a 16th level. So if we look at this midpoint to the first octet, we got a 16th level that it hit to the tick. And again, we hit the lower part of the fair value gap, and now we're closing above it. So again, this here is significant. If this candle is created as a bullish candle, and then we break down through it, that'll set us up to be off to the races to come down through the midpoint here. But again, there's somewhat of a cracking correlation. We have a change in state on the Dow. So again, we just got to be cautious, especially with the dollar looking the way that it does. Okay, it looks like it could hold this still. It's having a very hard time getting through it. So we just got to keep tabs on that. Let me move this over. And again, in the larger grand scheme of things, this retracement into this fair value gap is actually part of that second stage distribution. You see that? So I would not want it to see higher prices getting up above here. Okay. Previous weeks. Why did I have? Oh. Yeah, why did I have it down there? That's weird. This is the previous week's high, okay? So we're inside the previous week's range. So we have what ICT calls an inside range so far. So again, I'm just looking for a retracement to then go lower. And we just need the retracement to respect this area. That's equilibrium? I have it labeled as equilibrium. Why do I have that down there? Must have been on a smaller range. Yeah, so if we take this whole entire range in here, measure out the range, this is called grading a price swing. Take the low extreme to the high extreme. You get your quadrants. And if you're in a sell model, the 25% level here, well, let's start from the top. 25% retracement from the high. That could start smart money reversal. And then, you know, sometimes if it's really quick off that smart money reversal, it could be where the first stage distribution's at. Clearly, we could see that the accumulation on the left side of this curve, if this does get down below these lows, is over here. So that right there, once it got below it here, treated it as distribution. So that's a BPR bullish that then turned inversion to go bearish for the sell model. And then we got through 50%, right? Because that's where that accumulation was. Now we're at 75%, and that's real close to this as accumulation to distribution. So that's what my expectation is if I want to see this go lower, right? We're inside of a market maker sell model, longer term from the daily chart. So unless we get some dramatic changes where price goes through this level here and inverts that, I'm going to continue to believe that this is the case. Why do I have the fair value gap here and not the full fair value gap? Well, the answer to that is because this low, right, the wick, followed by displacement, creates a balanced price range. So the actual fair value gap that it's looking to, you know, fulfill and utilize is going to be this area that doesn't have a wick or any other type of delivery other than the downside on this daily chart. Okay. It's a very important distinction on how to identify what sensitive levels in a fair value gap are going to be used and whether it should go deeply into it and fill it in entirely or whether it shouldn't fill it in and just use a little small piece of it. Okay. So yeah. So I think we're just going to use that little piece of it and we should be able to continue to go lower. We're inside of a macro right now. So this is the unreliable macro. That's what I call it, at least. It's not always unreliable, but for the most part, it's better to wait till after the open anyway, and then take the macros after the open, because you could get caught trading the manipulation portion of the AM session or the New York session in general, because a lot of times pre-market, when it comes to the session power 3 for the New York AM session, many times has manipulation and consolidation happening during pre-market. It's not every day that this happens, but a lot of the times that's what you'll see. And then overall, right, you'll take a loss pre-market, but then come to find out that you were correct about the direction as the AM session matures. So to avoid that issue, if you feel that a lot of your losses have come from pre-market, just allow for price to print. You know, you're not missing anything by not taking a trade. You know, those of you that have been with me for a while know from watching what I talk about and watching what we point out before the fact, there's always a move, right? Every hour has an hourly range. So technically there's a setup every hour. There is a first presented fair value gap that happens every hour, right? It's not just for the silver bullet at 7 a.m. Pacific Standard Time, 10 a.m. Eastern. Every single hour in the 24-hour period has an hourly range. Every hourly range has a first presented fair value gap after it opens. And then you just try to trade with the higher time frame daily direction, and you can find a setup every hour. I encourage you to backtest this. Don't go in assuming that you're going to be able to get all these different trades just because, right? You know that there's a first presented fair value gap. You still need context about where the higher time frame is going and what phase we're in terms of power 3. Every hour also has a power 3. So just more things for you to go study. But yeah, so let me see. I came across ICT's analysis 7 a.m. using the fib for analysis. I don't see you put emphasis on this. Yeah, well, he kind of just talked about that. He's never released that. So not even the charter members got that early on. That was a gift that he gave everybody publicly. I think it's been like maybe a week. But I've been using it in my private group. We've been identifying it and implementing it to see how it can amplify what it is that we're doing. And all he pretty much is doing, for those that may be confused about that pre-market range that he's analyzing from 7 a.m. to 9 a.m. Eastern time, or 4 a.m. to 6 a.m. Eastern, or 4 a.m. to 6 a.m. PST. What he's doing is he's outlining, let's go do that right now, actually. So he takes 4 a.m., the high extreme and low extreme. So 4 a.m. low is here. We're not at 6 a.m. yet, but I'm assuming if this doesn't break this low, this will be the range. So what he's doing is he's using this range as we go into the open while understanding what the draw on liquidity is to basically help him identify PD arrays, or help the student identify PD arrays that are going to be significant and aligned with one of these quadrants. So if I'm bearish in a market maker sell model, which could be the case if it goes lower here, if there is a PD array that aligns with one of these quadrants or the octants that price then obviously supports the downside delivery with and then trades up into them, there could be a couple of PD arrays in here, but if they're not aligned with an octant, the importance of this is basically helping you identify PD arrays that align with this particular range being outlined and the octant levels, helping you, sift through the PD arrays essentially. And again, you still have to have an understanding of where price is going. Pretty much every concept that he ever rolls out, he always emphasizes that you can use this concept and it'll be effective, but you still got to understand what the draw on liquidity is. It's not like, a magic bullet. And every PD array that you find that overlaps the quadrant levels is still going to require context. You still got to have your draw on liquidity. You still got to be in line with the higher time frame narrative. But yeah, that's kind of what I've been able to gather from the emphasis of this. And then again, there's another use case that he also has for this concept as well, which has to do with projection. Okay. So if you get half standard deviation, one full standard deviation, did I put the halves? Yeah. So half standard deviation, one standard deviation, 1.5, 2, 2.5, so on and so forth. If you can align these projections off that range that you analyze with another PD array that's in alignment with your narrative, then you're able to have a reasonable targeting idea or projection idea similar to some of the other ones that we use, like this projection idea when you have like a breaker or a mitigation block at a turning point. If you're bearish, especially if you're in a market maker sell model or buy model, you could project from that smart money reversal and the breaker or mitigation block, and you can get 2 to 2.5 standard deviation to 4.5 standard deviation for targeting. This also helps you outline what the full price swing could look like, and if you can align it with a PD array like it is here, you can look for the target, but you can also anticipate when a large price swing is going to pretty much promote a retracement. For whatever reason, a lot of the time, I'd say like 90% of the time when you analyze this correctly, when you see price go into the 2.5 standard deviation level, it almost always, I'd say 90% of the time, creates a retracement characteristic like you see here. And this is not only useful on the higher time frames for the bigger swings, it's actually useful when you're on the 1 minute chart, analyzing a 1 minute market maker buy and sell model. Okay. Like for example, we have this here. This may not be a good example right here. We'll see. Wait, what the hell? Where's my projections at? Oh, whoops. So come up here. Actually, let me go to the 30-second chart. So I'll keep this range up so you guys can see how I use the new concept that he is teaching. It's a pretty good concept, honestly, especially if you struggle with identifying the right PD arrays. You could set a rule where if it's not overlapping with this, right, at least one of these, and it's in alignment with what your draw on liquidity is, you could then map out the particular PD arrays that should hold. And say you take an execution up here at like a breaker or something, right? And you're seeing price go lower. As it's creating PD arrays in this price leg, laid over top of these quadrants, those could be levels that when price trades into them, you can anticipate get respected, right? And continue to trust that it's going to keep going, in this case, lower, right? These equal lows are definitely of concern. Maybe not concern, it's probably the wrong word. But yeah, so when it comes to like this projection here, again, this isn't really a good example of this, right? It's too small. But you can kind of see like if this had a smaller projection, I mean, maybe if I go from that little area in there, that is a swing low. Yeah, it doesn't really align. Oh, I guess it kind of did here too on the micro scale, using that fractal low and that fractal high. If this was a market maker sell model you were observing, price comes down into 2.5 standard deviation. So yeah, I guess this is a good example, actually. Kind of surprised, right? Because it's such a small time frame. But it went down into the 2.5 standard deviation. In particular, gave a retracement. Okay, and then price ended up continuing to drop lower. If you use this, I'm not sure if that's going to be a good one. It's a little bit too big of a range. Yeah, no, that wick it's too manipulated in that low. Kind of throws it off a little bit. I wouldn't be surprised though if this did get up here, it would start a retracement. But that's also coupled with this. So you can kind of see how this projection can align you with PD arrays and certain liquidity pools as well. And again, if you're correct on the day, if you know where the narrative is, if you know what it's reaching for, and your bias and narrative understanding is pretty solid, this can be a useful tool. But it's not a be-all end-all, just like how this tactic here is also not a be-all end-all. It's just a supportive idea that can really assist you in identifying certain things. Okay? So I hope I was able to answer that question. I've definitely been getting a lot of questions about this in particular. He also has one for the PM session as well that I looked into. I don't really watch a lot of his new things, but because I got a lot of questions, anything I get a lot of questions about, I'll go do some investigation and then give my 2 cents on. But obviously, even without all this new stuff that he's pumping out, we're still at the point with our information where we can come in every single day and find a setup. It's just a testament to the fact that eventually you're not going to need every concept that you've learned. You're going to find things that work for you, have enough to determine bias, narrative, invalidation, risk management, and targeting, and just like overall direction. And then also executions. And you're not going to just need anything else, right? So keep that in mind when it comes to your guys' study, because just remember, before anything else is being delivered by ICT, we've already been able to identify where price is going to go. So you can get the most of your knowledge on 7 a.m. Yeah, ever since he released the chain of custody video, from that point on, every single video I've noticed he has implemented this idea. And from watching the videos and whatnot, what I've been able to gather, what I'm going to potentially continue to use because it's useful, is the fact that this helps you identify the PD arrays, and then it also has projection as well. And I would say that if you get equilibrium on this, from what I've been able to gather from my back testing and just from seeing his examples, when price gets below the midpoint of this, like it is here, most of the time, especially if you're correct on the narrative, it's not going to come back above this, right? Once it gets below this, a lot of times it doesn't even revisit it. So that's just an observation that I've seen. I'm going to continue the rolling study to see just how viable that is. I'm sure it's not perfect, like everything, right? It's going to have times when it goes against it. But for the most part, I think this is useful, especially for traders who are just getting their footing with PD arrays or have a struggle to identify ones that actually work. But again, I do encourage you guys to spend time on some of the newer stuff if you are resonating with it. But again, those of you that have been doing this for a while, if you have something that works, I don't necessarily think a lot of the new stuff is going to change much, especially if you're already consistent. It's just reinforcement, right? Amplification or larger precision elements that's being released essentially. So you can add to your level of precision by having certain things like this. If you already have something though, and you watch some of the new stuff that he puts out or anything else that he puts out, and it starts to make you confused about what you're already doing that maybe has already been working, that is a sign that you got to slow down. Put it to the side for a minute, slowly watch the videos if you must add more, but don't let it disrupt what you're already doing if it already works, okay? It's a very, very important thing. It's not only my opinion, he's also said that himself. He says once you get things that help you make decisions and you're able to be consistent and you have an answer to pretty much all the different scenarios, there's no use in just constantly being a student. I trying to add more and more and more, because again, more complexity is added. And every new concept that you study, before you can go in and accurately apply it and say that you know it, you're going to have to study it and get back tested data. So it's more work, which isn't a bad thing, especially if you don't have what you need at the moment and you're still figuring things out. But once you already arrive and have 6 months of consistency, maybe you pass funded accounts, get consistent payouts, or you have a personal account and you're able to determine something every day, there's no reason to elevate the complexity unless it fits very smoothly with what it is that you already do. I personally think this fits very smoothly with the things that we already do. It doesn't really throw anything off. It's an added layer of confirmation, right? And again, he just released this not too long ago. So everybody is in a mode of discovery when it comes to this. So if there's anyone claiming that they've known this for years or whatever, they're a bunch of liars, because he didn't release anything related to this in the charter group. So be careful of idiots on social media. Okay. But that's kind of all this is and how I'm going to use it. And what I've been able to gather, like I said, it's helping you navigate pre-market to then AM session, opening range delivery. And it gives you key levels to reference and go off of, and areas where certain PD arrays will be aligning. So you can pick good PD arrays, but then also there's a targeting element that he outlined. And he also has this, but also for the PM session as well, which I'm not going to be too concerned about because I don't trade that session. So yeah. So with that being said, again, I hope I answered any of your guys' questions. Kind of my 2 cents on it. So that was spot on. I've used the fib extensions on the 15-second. Yeah, I really like what I really like, because I'm already good at identifying PD arrays and what I want to do. What I do really like is when he gives us things that help us project price. Like, look at how amazing the 2.5 standard deviations have been. Like, how often are we using this? I've got to the point over the years when I first discovered this or heard him talk about it. I'm to the point where I can anticipate where the start of a market maker model is going to form. I send a projection up, and that helps me identify the PD array that could present the smart money reversal. And then once I get that smart money reversal, I'm then able to project lower and see targets beyond the original consolidation and how far price could potentially go, right? So it's very, very useful, very simplistic. It's not complex. Just like this idea here, it's not too complex. I already see there's a lot of people complicating this concept, right? Even though it's literally just a specific time interval. You put the high and the low, you get quadrants, 8th levels, 16th levels if you want to get real precise. And then you just map those out with the narrative that you're already trying to see price operate within. And then you just use it as more gripping points, essentially. And then also forecasting. There's a forecasting element to it too. Okay. There's another projection idea that you can go off of as well. That being like the Asia projection and also the central bank dealers range. So again, you could start to get confused with all these different projection ideas. So you, like ICT has said before as well, if you find stuff that works for you, and like in this case, if it's having to do with projections and you understand 1 or 2 of them, but another one confuses you, there's no reason to add more. You already have a tool that gives you projections. So it's kind of monotonous, right? Kind of just like overkill, right? At least in my opinion. I know that others have this opinion as well. Even ICT says, just find what works for you, and eventually you'll stop being a student. Or you should find the point in your journey where you tell yourself, I'm done being a student. It's now, let me take the tools that I have and go apply them and not tinker with it if it works. Okay. And we all get to that point at some point. I've been doing this for 7 years. I got to this point after year 4, and it's just been nothing else I've really needed to add, unless I see something that I get a lot of questions about and I see that it fits what it is that we already do. Outside of that, that's kind of how I view my learning at this point. I don't really have much else to learn, but obviously there is more stuff to learn. I just personally feel like I have enough, unless something can fit nicely. So it's a perspective you want to have over time. Obviously, if you're just learning, you're just getting your footing, go and discover everything he talks about, because there may be things that are more new that fit your style and how you understand price delivery through his teachings, with something newer rather than things from previous, right? And that is the case sometimes. And then, of course, when I have students that approach it that way and find success with newer stuff, me being a mentor, so I can give them value, aside from the things that I already know, which reinforces everything, I have to obviously go back and do the work to be able to make sure I can help them. And if I don't understand it and I'm going to be of no use, I'm really honest and transparent. And I'll just tell you that I don't know. But things like this was very, very easy to understand. I watched a video like from chain of custody up to today, or what, yesterday? Was it yesterday? I think it was last week's video. I watched a little bit of yesterday's, but it's ironic. Those of you in my private group, if you watch that video, I pointed it out. I only watched like the first 20 minutes of the video, and literally every single thing that he talked about, pretty much, give or take, 1 or 2 things, was perfectly in alignment. And even some of the extra details, like the regular trading hours gap down below, was not mentioned. So we actually had even more context to yesterday's price delivery than ICT shared in the video review, which is amazing, right? And we also called the upper range target that it reached into and pretty flawlessly delivered price into, you know? So another thing too, the question is like, when do I know that I have enough, that I don't have to go in there and learn more? Well, if you watch some of his videos, and you see that your pre-analysis or your active trading is in alignment with his reviews, give or take, maybe one or two things that he may have mentioned that you didn't see or use, you still are in line perfectly, right? So, I mean, it's very clear to see kind of who we learn from, right? Who's like the oracle, and where our trading has come from. It's obviously ICT, right? You spend enough time with somebody, their style and good things do bleed into you. It's also on the flip side, the negative things can also bleed into you as well. So you got to be careful. And hopefully the person or other people that you guys learn from is as transparent and honest as we are, as ICT is, because you don't want to get sucked into bad habits for no reason. But yeah, see, Jen said, how aligned we are in this group. Yeah, it's amazing. It is amazing, Jen. You're a savage, by the way. Like I've said before, can't wait till you start a YouTube channel, because there needs to be more, like we talked about, people that know what they're doing. So I can't wait for that. But yeah. So with all that stuff being said, again, we do have this little range in here. We still haven't broke that low. So we still have the high extreme and low extreme being this. So we got projections going lower. And we simply have these projections to watch, or the quadrants to watch for the pre-market range. Let me see, do we have any PD arrays? We have this fair value gap in here. So that's interesting. When it got through it, look what it did. Offered a little move. It's a pre-market session though, so I wouldn't be surprised if they hang around in here. It's a pretty reasonable size range yesterday. Pretty nice run up, huh? Yeah, do you guys have any more questions? I appreciate you guys asking the questions you've asked already. Make sure this is right. So yeah, is everybody in alignment with what we want to see? Does everything make sense so far? Let me make this more clear. Wait a minute. Okay, the 2 minute had it thrown off. Let's go to the 5 minute. So yeah, the equilibrium's up there for their regular trading hours. Let me see. So again, we got this big regular trading hours gap up here. We're above this one, so we got to watch that, okay? If price is going to keep going higher and reach these equal highs, we're going to have to see this regular trading hours gap quadrants get respected. Now, again, if we get displacement from this level that we're at, and let's say the dollar goes higher and looks like it wants to get through some of this fair value gap, then obviously we're going to have to consider the fact, right? If it can't hold this, the price may want to go lower. I would say that shorts would only be of interest to me if we get down below this accumulation level here, because you got the origin of the move. Yeah, this is some of the entries. I guess I still have them on the chart from yesterday. But yeah, if we were to break down, respecting this buy side delivery, which is this candle in here, it's that up candle. So we got buy side, sell side delivery, balanced regular trading hours gaps pretty aggressively. If we were to get that to hold and price was to break down through this low here, notice this has a bunch of consecutive up candles. And then we have the stutter right in here. So it was accumulating in here before it went higher. So if this ends up getting below this and doesn't hold some stuff like this, right? Wick, displacement, that in itself should be a BPR. This right here, again, if it's going to be bullish, should act as a market maker buy model. But if that doesn't happen, and we don't look like it wants to get up here, and we do show respect to this by displacing through this low, then we could frame this range as a market maker sell model for continuation to the downside. And then until it stops utilizing these things, we would continue to push price lower, and it would look to try to reach for this. But again, with the dollar stopping in this range here, this fair value gap, we're going to have to consider the fact that this is just going to accumulate and then maybe look to decline, especially with these equal lows here. Right? If we go over here to the yields, we got the yields declining. The yields have a positive correlation to the dollar. Okay? The yields declining is happening also at a time when we're in a market maker sell model on the dollar. Accumulation to distribution, right? We're inside that level. Okay? We got equal lows down here that look very obvious, right? Down at 97,650. I mean, 98 big figures, pretty nice too. We can kind of observe in reality and kind of see this using this level, the market maker sell model second stage distribution, very shallow retracement to then displace and target these relative equal lows. It just looks pretty reasonable, pretty rational. That's also supported, like I said, by the intermarket relationship with the yields having a positive correlation with the dollar. Yields are declining. We respected this level. If you remember from Sunday, I said if we start to break down through this range, we may look to try to get into this and the rejection block. Looks like we are getting down into that. So we now have a high, low, failure swing, breakdown. So it's not only a rejection block, but it's also now a mitigation block. And we could take it down to the lower 25%, which is 5,209. So that lower part, we got buy side, sell side delivery as well. So that's a balanced price range, bearish order block. It's also a small market maker sell model. If we were to drop down to say the 1 hour chart, you can kind of see that happening here, right? So higher time frame retracement, breaking through the low, excuse me, can be also a market maker sell model. So market maker sell model being completed, rejection block bullish being disrespected, bearish order block being respected here now. If we get below and respect it, mitigation block looking to go bearish with potential targets being this and a failure swing. You start to see how price rolls over, and it tells you the story when you're able to identify all this stuff. Okay, so this buy side to sell side should be a balanced price range. One thing that may upset this being a balanced range is the fact that there's this gap in here that doesn't have any trading in it. I would have been more satisfied if it came up into that. Until it starts to reach up there again, obviously that'll be on my mind, but for now, we have this very close liquidity. It's not going to, well, it most likely isn't just going to leave these equal lows here, come up here, and then go. We're so close to it. A better idea that I think would be more reasonable is they may peak below that if they do want to come back up, start to race higher once they take out this low, then get up here. But, you know, if it does that, or if it's going to do that, we'd have to invert this. And then we would just use that as an inversion as it closes above it. And then that would set the stage for that. But until that happens, we got buy side, sell side. We got buy side, sell side, market maker sell model, second stage distribution here, quick delivery, and we still have relative equal lows there. So we got a triple threat right here. So one low, two lows, three lows. Then we got the failure swing. So, and again, if this continues to do this, that's bullish for the indices, right? Bullish for the indices, bearish for the dollar, bullish for the currencies, which again, we map this out as a market maker buy model. Map this out as accumulation to distribution in the buy model. And it looks like it's respecting that, okay? And our target up here is pretty nicely met. If we go back to what I was talking about earlier a little bit, about how there's a gap. If it has a wick inside of it, this is the same thing, just going the other way. There's a wick in that lower part. So what's the most sensitive part of that fair value gap going to be? The part that has no wicks or no other delivery. And that's that upper part right there. Okay. And what did it do? Reached into it. We closed down below it. So, instigated a retracement. If we get a change in state here, that's going to tell us that the retracement is most likely on the sideline already, and the expansion is now going to continue to take place. You want to wait for these types of things when you see price retracing. Okay. So again, hopefully everything's made sense so far. If you guys do get value from the content, don't forget to like the video, subscribe to the channel. Definitely helps me get in front of more people that need this type of clarity, who are looking for this type of clarity. And it helps me help other people, right? And it's a free way to say thank you, right? If you guys get value, of course. And I appreciate you guys for doing that. But yeah, so again, I hope everything makes sense. And with what we've already talked about, we'll just continue to monitor how these levels we've outlined get respected or not. I do see these equal highs up here. So if we do respect this midpoint of that previous regular trading hours gap, as long as we don't take out this low, right, it could look to try to take out levels like this. This anchor to this delivery going higher is that low of the daily fair value gap. So this price delivery is basically being instigated by these lower levels. I can kind of show you where the setup was that I called on the live call. I didn't participate in this. I wanted to wait. But everything that ICT talked about, we were literally talking about before he even dropped the video yesterday. And we were inside of a position in here that he labeled as an inversion as well. And then I personally waited, probably a little longer than I should have, until price got up into here. I took this high to that low, got 50%. Once it breached it, that's where I then took a trade, captured 40 points. I sent it in my private group when I did it. And I just looked at this as a market maker buy model. And then I aimed for this up here. You guys saw earlier I had it labeled. I shared the markup too, showing what I did in the moment and the target I was reaching for. I talked about the upper regular trading hours gap. My low hanging fruit target was 29,260. It obviously ended up going well beyond that and closed in the entire thing as we went later into London. Okay, so again, this low is significant, like I said. So we'll see what that wants to do in relation to that. And keep in mind this concept that you guys mentioned earlier. I'm going to keep this on the chart so you guys could see how we use it, right, when it comes to picking PD arrays. And if we go to the 5-minute chart, 6-minute chart, keeping this range identified, we could see that this fair value gap is in alignment with multiple levels. Okay. We also have this up candle here lined up with a quadrant. We also have this high, low, failure swing. If this breaks this low, we have a wick with displacement if it can break through it. And if it closes below that, that's going to be really nice. Something else aside from that, we also have this here. If we were to invert this fair value gap, we have this wick in here that may act as a BPR if we are going to look to see it go higher and the dollar is going to go lower. I would more so like to see that be the case today. I'd like to see this wick act as support. That's also ironically aligned with the midpoint of that regular trading hours gap. So if we can get this thing to maybe peak below this, spend very little time down there. We have sell side, buy side. That's a buy model that got completed. It's also a balanced price range, sell side, buy side delivery. But if we can get those things to continue to respect and we get above this inversion, I'm targeting this high up here. And then beyond that, We have the highs up here as well. And again, what changes my opinion? Well, if this breaks down below this low, I'll be questioning simply when we get below this wick if these lows are going to be targeted, right? So that's kind of how I'm going to map this out and observe this. I'm going to use this as an important PD array here. So I'm actually going to go run to the bathroom real quick. So give me 1 second. Sorry about that. Let me see. Do something real quick. Oh, where's it at? All right, I'll be right back, you guys. Appreciate the patience. All right. I'm back. So yeah, we can see that this thing's being respected right here. Got any questions? Okay. So again, I appreciate you guys hopping on, being patient today. But yeah, so hopefully everything makes sense. And now it's just a waiting game, right? We got this order block with this quadrant. Look at how it's respecting that in line with this overall concept, right? You look at the PD array that's aligned with a quadrant or this one. Both of those together, they're both aligned with quadrants. So it's a very interesting visual that's represented by this. You got the wicks here being respected, right? So we got that, again, inversion or fair value gap right here, normal fair value gap for now. And we're trading inside of this level here. So let me fix that. See, how high does this wick go? 15-minute? Oh, it's a 15-minute wick too, actually. So yeah, I would be paying close attention to that. It's a 15-minute wick. It's definitely something to keep tabs on. And again, if this ends up below this, look at how clear that is in terms of being able to identify a market maker sell model. And another thing too, if this was to break down through these lows and then start to rip aggressively again, and we get back above these levels, then you would be inside of a market maker buy model and a failed sell model, right? So this level is going to be important to me. We do have a regular trading hours gap here now, the brand new one. You see it just popped up. So we got to watch this, right? If this thing does break through this 15-minute wick, I think the intention is probably going to be to aim there. I would prefer, given the dollar looks like it's just simply retracing to go lower, if we do see that, again, that's why I would be potentially preferring to see this go up a little bit. right? Or a lot of it, right? If the dollar is going to continue the market maker sell model. Nothing has changed that opinion, right? Looking at price, unless you're on the 1 minute chart, getting tugged around left and right, nothing's really changed overall, right? It's no worries, Tony. You got time to rewatch it. It'll be there. Yeah, if you guys ever can't be here on Sundays, they are very important because it gives you my whole weekly outlook, and you also get to vet my analysis, whether I'm correct by the time Friday comes. And then you also get to, see some of the adjustments that sometimes are required, because you can't be perfect, right? We get it right most of the time, but when things don't go according to plan, we got to be able to adjust, and you got to be able to be present to be able to hear what the adjustments are, so you can understand what went wrong, and then how you yourself can go about adjusting your own analysis, if you are taking some of these concepts and using them. Yeah, you see how that thing is beautifully respecting that level? We got ES holding too. So again, we do got the, oh man. We got a nasty cracking correlation. I'd say that if this run up right here breaks this candle, that's a rejection block, right? So if this thing comes down, wicks this, and then starts to accelerate, I can anticipate this as an inversion before it gets through it. But if this thing just blasts through this right after it does this delivery, we got low, high being created. If we create a lower low, that is a beautiful breaker. I think that'd be very nice. So let's see what happens in here. It's either going to invert this and then give us the higher objective, which is what I would like to see, that because a dollar, it's in the market maker sell model. But if it doesn't do that, then obviously we'll be able to adjust once it gets through this. For now, though, I want to see and anticipate more so us getting beyond this fair value gap here. So we're going to be a little flexible this morning. So I can kind of make an argument for a couple of different things. Higher time frame wise, I'm really banking on the fact that this retracement is just that. It's inside that weekly suspension block, the weekly fair value gap, whatever. So change in state of delivery above this would confirm that price is going to keep going up. Until it gets above this and closes, there's no real full change in state of delivery, so it could continue to keep going lower. So that's why we're watching this in here. On this smaller scale, we're able to observe these little levels. So again, that 15-minute fair value gap, or a 15-minute wick, you see how it's being respected here? We got cracks and correlations, so it's just one of those moments where you got to watch yourself. Okay, we're getting above those levels, so we got a bullish breaker forming here. We're not in a macro. It's really early, so it's a little bit more high risk. But we're getting above my level here. That should be able to get us above these equal highs if it is going to go higher. We got stop run. We got anchor PD array being the 15-minute wick midpoint, right? So a balanced price range, right? High, low, higher, high. So that sell side to buy side, look how it was respected here to go bullish. Here too, bullish. So now that we broke through it a little bit, but we're still respecting the midpoint here. See how precise that is? It still has a chance to keep getting up here, and we got failure swing. So that should be low resistance liquidity run, especially with dollars interest to want to go lower. I want to see us stay above the midpoint of this, and we're about to get outside of that. I like that reaction there. It's really confidence boosting that we're going to get through these highs. So again, like I said, I'd prefer to see us get up, but I've painted a scenario where if it does fail to go up, we're able to then get in line with it. It's all part of being a trader, right? You got to be able to be flexible. You can't just be married to one thing. I'm obviously gun to my head aiming for buy side delivery because of some of the things that we've talked about. But, if it does end up turning around and does another thing, then we'll have to adjust. So let's see. Let's go to the 30-second, see if there's any PD arrays aligned with the range right there. Okay, we got a breaker right there, so I really like that. So yeah, we're coming back down into this range in here. We should be able to see acceleration through the highs if dollar is going to be weak. It's kind of sketch on these other ones. The Dow is just melting. So that's not necessarily the greatest thing to see. So again, if this thing gets back down through this fair value gap, if it gets down through it below the low there, then these highs are going to have to be on the back burner. But for now, nothing's telling us otherwise in terms of the equal highs up here being potentially targeted. That may change, right? But this is why we don't take trades right at 6:30, right? We let it speak to us. And again, if we take this low out, my objective is going to be regular trading hours, 50%. So yeah, we're now contesting that lower part. So in order for me to see an idea in here, we're going to have to see this wick get traded above and then just a small little retracement back into the high. That would be when I would look to enter. There's too much cracking correlation. It's too early to the open. There's too much stuff that's kind of all over the place right now for me to think, oh yeah, well, there's a breaker. Let me just execute that. Maybe there's some that are more aggressive that'd be willing, even in the face of lots of conflicting signals. Maybe they'll be confident to get into something because they're more aggressive. I like to be certain when I get into trades. Not that it's perfect all the time. Even when I feel certain, I could still get it wrong. But over the years, I've understood what allows me to have certainty. And when certain things are happening and my certainty's lacking, then I got to wait, right? We have a good idea of what could happen in here. So we'll see if that continues, right? I don't really like this rejection here, at least for the buy side. Again, if we get above this wick with displacement, that's a BPR. We also have accumulation, manipulation, distribution, rebalance, redelivery if it's going to get above this high. So this thing should start to rip from here if we're correct that it's going to go up. And if not, if it breaks this low, we have a low, high, low failure swing, break below this. That'd be a type 2 dealing range, rejection from this upper level. And then we should be able to see this thing get tagged with really no issue. So I'm just waiting, right? I'm in a mode of waiting. And until I'm certain, I'll let you know, right? We'll be just sitting here observing. I'm more so going to wait till the macro, even if something unfolds, just because how chaotic these assets have been up to this point. I mean, the S&P is going nowhere, right? We did take these highs out. Okay, now I'm getting more confident that the shorts are going to unfold. So let's see how this is treated when it comes up. If it can offer a bullish candle and then trade through it, or if it just slides through this new day opening gap, we may be able to use that. So yeah, we broke through that type 2 dealing range. It should fly through this low if it's going to go lower. So yeah, let's just wait and see. So we've got a wick, displacement, fair value gap. We have quadrant from that first 2 hours lined up with this fair value gap. So that thing should be extremely sensitive. So it should be able to get down below these lows here. So fair value gap right there too. That's aligned with the quadrant over here. That should be a sensitive PD array. So let's see if that's going to be reactive. Should be able to send us lower. See what happens. It's actually an inversion right there. Very deep retracement. So if it was to go up, the only way that I will be back in line with bullishness is if we can get up above this high. Very, very nasty in here, whether you took shorts or buys, unless you pick the low or pick the top, you're getting taken out. Unless your stop is larger than we like. So again, with this being the case, I'm waiting. I'm not going to go in here gunslinging real money when price is clearly indecisive right now. Let's let it confirm, right? We got liquidity up there. Relative equal highs here, here. Dollar still respecting the lower part of that. Let's go to 1 hour. So the dollar's going lower here. So that's what we want to see. So if that's the case, we have high, low, getting above this high. That's sell side to buy side. That is a market maker buy model. And it's also a breaker. I want to, oh man, if price could give us a wick into this, I want to see a wick into that. That'll be where my first consideration is. And then my stop will just simply be below this. Again, we're still not in a macro, so it's still pretty risky. Haven't gotten out of this range. So let's watch this accumulation level here. It should act as distribution if this is going to, in fact, try to get above the high up here. We have a low, high, failure swing. If this is above this high, it's going to look to target the origin over here. So we need to see this accelerate from here. We don't want to see it do this, come back to equilibrium and not move, because we're clearly in consolidation. Just gonna haven't pulled the trigger yet. Could pull it right now. I don't like how it feels. Doesn't feel right. I mean, we still got this S&P not really moving. We do got the Dow starting to move up. We do see, time frame is at the 1 minute, 30-second chart. Fair value gap inversion, it's respecting that. I think I like that. Still highly risky because we're in the middle of a range. So you got to weigh things out for yourself. I think in this type of circumstance, it's best to let the macro mature a little bit. So again, still haven't taken a trade yet. Just to show you. Oops. Show you no trades have been taken yet. Okay. Nothing taken yet. It's considering something in here, but like I said, I want to see how this is treated. It's not treating it very nicely. So it's best to wait. Okay, we got the retracement here on the 1 hour. That's nice. It's respecting the low right up to this point. So again, that low here that I talked about from earlier, right down in here, it's an accumulation on the hourly chart. So that makes that low even more significant if it was to break through it. For now, it's kissing the top of it right there. You see that? So we got that 1 hour being respected here. Okay. So yeah, it's respecting that 1 hour order block. That's nice. Got this inversion in here. Failure swing. Got failure swing up there as well. So we got SMT at the lows. So the Nasdaq is actually a strength holder right now, at least for right now. So this may be very, very sensitive in here, but again, given how it looks, it's not willing to go anywhere. I'm not willing to sit through consolidation like this. I'd be willing to give up a better RR to have more of a move that's begun already. That's just me though. I like that we still cannot get to the regular trading hours down here. I like how it's refusing to get down there. We are seeing pretty solid rejection from this new week opening gap. But there is a run right there. So again, the idea here, kind of justifying that this was going to keep going higher because of the respect to these levels, also respecting this. Obviously that was correct. It's just stuck in a range, you know what I mean? So you got to make the determination whether you're willing to sit through while price gets outside of the range, or wait till it gets out the range like it did here and then make a decision. So yeah, now we're in the macro. So yeah, it's very, very reluctant to really give us much of anything reliable. So we took out the highs. We do got SMT up there. It's very reluctant though. Could very easily hold us in consolidation. Okay, so let's see what it wants to do in here. Nice. Still holding these levels. That SMT definitely put a spark under this thing. Not sure if we're going to get that follow through, but we'll see. Massive cracks in correlation here. Not necessarily the greatest thing to see. But let's see if this thing can continue and try to get us up to here. We got sell side, buy side. It should respect this range in here. We're in accumulation over here. Accumulation over here. Sloppy distribution, but it still went. So this here should be very shallow if it's going to try to get up here. So we'll see what it wants to do. There's lots of failure to get up there. So if this was to get back down through this, then we would put our attention back to the regular trading hours. So yeah, now the macro's coming in. See if we can't get some acceleration here. So we continue to watch this. We got Wick showing respect to these levels here. The new week opening gap is going to be important. We're getting above this 1 hour change in state. If it can get above the candle, that'd be very nice. And again, we got this 1 hour bullish order block holding price. So this is all anchored in a buy model here, potentially. Change in state of delivery, change in state of delivery. Respect, right? It's closure inside that fair value gap. That's a good sign. Okay. See if we can't get this thing to run up there real quick. And that's enough for me. That's enough for me, everybody. Jeez. Freaking love this stuff, dude. Right in that accumulation, like I told you I was watching. Ran up, took small profits, 5 contracts. Like I showed you a second ago. 30 points, right? Took profit, first profit. And then right before we got above this high, because I don't require it to fully blast through it, ended up capturing that too. So in total, ended up catching 62 points with one partial and then the full target. Again, I outlined everything saying that I'm not going to be able to go short or want to go short unless price was to get back down through this. Did we ever get down through there or do anything that took me away from being bullish? Was I a bit sketched because of what I see here? Yeah, I've been honest all morning. So it's a lot more risky, right? I talked about this being a type 2 dealing range. Okay. So even this entry in here could have been looked at to then try to target the highs up here. Okay. So yeah. So pretty tricky opening first 30 minutes. And I'm sure there's going to be more moves that we'll be able to discover here in a little bit. But this is what I engaged with my AMP Live account. As I constantly show you guys, I trade live. Okay. I'm not demo trading. There's nothing wrong with demo trading. Don't take it in a way that, you know, I'm talking shit about demo traders who are just trying to learn, you know. Let me see. Emmanuel said 1 minute. Indigo order block. Came back, tapped to the first percent for value gap, and took the hell off. Yep, absolutely. It was the first. Was it the first presented too? Was it? Oh yeah, it was. Nice. So yeah, this down here was actually first presented for value gap. I didn't even realize. Well, that makes this rejection even stronger. You see the rejection block in there too that formed? Whenever you're trading into a PD array, if you can stack a rejection block that gets traded into and then respected, from what I've been able to gather over 7 years, that's a very powerful confirmation. It's similar velocity in the movement to immediate rebalance. If you're like trading into an order block, a breaker, or whatever, and you can get a rejection block that forms, that price comes back into and respects, you have multiple things going for you, especially if you have a clear target. So yeah, watch this inversion here. Yeah, just another thing for you to go in there and study. Okay. So yeah, we got to be careful because we're going into 6:30 or going into 7 a.m. and it's been very, very consolidated. This is not expansion yet. We're still inside of a big range overnight. Look, you see this down movement right there? Go to the 2 minute. See that bullish order block? Drag it over. We have the quadrant. It's overlap multiples, but it's beautiful, isn't it? We have low, high, failure swing. So guess what? This candle is a mitigation block. If it's going to go higher, it needs to hold. What I don't like is this. I really don't like how we wicked above it and are starting to rapidly come back through it. And we closed so below it. And now we're back below the new week opening gap. So again, follow through is clearly going to have somewhat of a hard time today. Does that mean you can't find a setup? I just showed you that that's not the case, right? But you got to be very nimble. So that rejection block formed here as well, came up, it couldn't even get to it, and we're now below the new week opening gap. Let's actually start dropping down. Look, you see this big displacement or big wick with displacement. If it was bullish, this should have held, right? So there's a risk now of this 7 a.m. reversal coming in to get us down below, especially if dollar was to pick up a little bit. You know, we're still inside of this. It hasn't closed above the change in state. So wicks above that, strong rejection from a PD array. You know, it's kind of sketch, right? Look at the overlapping candles. That's the type of condition we're in right now. So highly risky. Okay, so here's this fair value gap. Let's see how it treats that. Remember what I said. If it gets below that, it's going to be a problem. This will then turn from a buy model we were observing that fully completed. Look at it. This high to that low. All of the price delivery in there was a market maker buy model as we look to target the high. Accumulation, all the characteristics unfolded. But we took it out now and we closed back inside the range. If it's bullish and a market maker model creates, it should treat them as balanced price ranges. So upper 25 to 50% should not be traded into like it is here. This makes me think we're going from buy model to sell model in terms of the consolidation. It looks like that's what we're going to get. So here's the accumulation. So breaking through that should result in balanced price range bullish to bearish, or accumulation to distribution. And it looks like that's what we're going to get with in violent fashion. Getting through this first presented for value gap, watch a return into that, offering a short down to this over here. At the regular trading hours, 50%. We have low, high, lower low. That's a bearish breaker as well in conjunction. So watch this level being very, 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 very sensitive. Watch this level here being sensitive. Right? Should be able to get us down below this low here. Market maker sell model. 15-second chart, you can see it a little better. That needs to explode to the lows if we're going to trust this going lower. I think we'll get that. I don't want to see this fair value gap get traded through. If it is going to go lower and it's trustworthy, we should continue to see things like this. We should continue to see this. If it comes all the way back, again, it'd be a moment where I would take a step back and I would not want to really try to push too hard. I'd want to get us out of this range before I make any other decisions, because then we're just in consolidation. For me, obviously, I'm able to trade consolidation because I'm able to frame it like this very quickly. But you may not be able to have that experience yet. But hopefully, seeing these types of things, understanding the way that I'm describing price delivery, hopefully it could become something that you can do as well eventually. But yeah, look at how beautiful that is. Look at it. Larger breaker that I just outlined, first presented fair value gap. So let's see if it's going to offer that. As long as it keeps doing this, staying below, it should be able to be somewhat trustworthy to get down here. And a real reasonable target is any of these quadrants. You know, if it is going to go lower, it's going to respect, well, it's going to look to target those levels. Everything else, like down here and all that, I could care less. This is the most common or most current. So it's either going to run down into there from this level, or we're coming back into the range. If it comes back in the range, I'm sitting on my hands. And then we'll just continue to observe. In this, all you would need is something like that. It's within the macro too. What I'm kind of concerned about is 7 a.m. But nonetheless, 20 to 30 points. 20's already been offered. See, can it give you 30? Simply below that low. Yep, there it is. Beautiful. So easy 1-to-1. Called it while it was forming. Told you what I was expecting. Gave you the framework and the entry, which I always do if you spend time and listen, right? It's not, I don't always lay it out like this, of course, because I'm not a financial advisor and this ain't financial advice. But I'm bringing you to the water many times. All you got to do is drink. And you don't got to catch the giant, big, huge portions of the move every time. 20 to 30 points when you're new. That's how I was able to see consistency early on. By limiting how much I'm willing to be happy about, right? I was looking for hundreds of handles. Little did I know, I was not at a level where I can capture hundreds of handles consistently. We're now at that point, right? I've been where I'm at with my understanding for quite a while now, you know? So you'll all get there. It starts with small bridges being crossed before you cross bigger ones. We have buy side, sell side delivery. All of this, if it's bearish, we shouldn't come back into the midpoint. We've got the lower quadrant here, octant level. That's aligned with this breaker that I just pointed out to you. Just all the more reason why this thing should be reliable. Rallied up. We failed to break the high, so it's reluctant. And now we're coming back to the low, going into 7 o'clock. So it's either going to pick up and get us down to these levels, or 7 a.m. is going to absolutely reverse, respecting the 1 hour bullish order block overall narrative. We're going to have to just wait and see. It's very reluctant to do much of anything. But so far, we're watching this framework here. Try to see if we can't get it to peak below this low. It's already offered 30 points from the idea I gave. And if you entered a little bit deeper, it's offered over 30 points already. Talked about buys as we looked to take these out. As it got above these levels, talked about market maker buy model, talked about this inversion for value gap being respected, talked about this mitigation block here, type 2 dealing range, talked about this breaker, right? Emmanuel, one of my private students, talked about the first presented for value gap, which I absolutely agree. That was a beautiful circumstance. Displacement had a little breaker in here, like I mentioned. Well, right here, dug a little deeper than, well, way deeper than I would have liked. Now, that move that I gave here offered basically very close to the amount that I was able to secure. So think about it. I've talked about buys and sells. I like to overall see price go higher because of the lower dollar. I told you guys that as well. Just because I had that opinion doesn't mean I can't go in and find things going the opposite way, right? Because we navigate price properly. I'm not married to a direction. And if I got to be flexible, I'm going to be flexible, okay? And you're going to have to get comfortable with that too as a trader. Doesn't mean you swing at everything. You still have to have rules. But eventually, you're going to become well-versed enough to be able to, find anything. I can reliably say, which I never thought I'd be able to say, given all the recordings and times that I've been live hundreds of times over the last 5 years, all of the days that we've been able to go on day after day after day after day after day after day after day, month after month, now year after year, and come out here and find setups that work out continuously every day, I can reliably say and believe within my heart that I can go into any chart, any given day, and take something out. Give or take sometimes when it's, I'm going to get it wrong. I'm not perfect. But with me being able to say that, with where I'm at and where you're going to be able to get to, losses clearly don't matter from that school of thought or from that frame of reference. So eventually, again, losses are going to mean nothing to you. It's just going to take time. I'm showing you I'm a normal individual. There's nothing special, right? I didn't come from any geniuses, okay? There's nothing special about my life other than the fact that I've been able to make myself able to do this by not quitting and just getting around the right people. So if I can do it, you absolutely can do it. So if you guys are struggling, or maybe, when things have done this, you've gotten beaten up, just consider some of the stuff that I've talked about, how I've navigated price. When price was going higher in here, what did we look at on the higher time frame before we started? All right, what has been used to help guide our frame of reference and our decision of what we think price is going to do? Excuse me. What led to me thinking that, okay, well, first of all, what allowed me to be profitable in this and not have price come back against me, right? And then take me out as a loss? Well, I'm comfortable with 20 to 30 points. I entered here, price ran up, I took 30, and then price went 60 and I got out because the conditions look a little sketch, right? We're still in a range, right? We have the type of week where my expectations drop. Okay, I'm not expecting thousands of handles, even though we may be able to get in front of them, right? Which we got in front of a pretty big move yesterday. And today's it's pretty reasonable. 60 points is reasonable, super reasonable. This sell that I just gave actually ran larger than this. I probably should have waited. Remember how I was talking about, we're ahead of the 7 a.m. time. It's a little bit close to the macro still. It's been kind of shitty. I probably should wait. I should have waited, right? Then I would have been able to capture this. But the idea that ran up, I was able to be profitable because I took profit at a reasonable target within my rules around times like this, right? Around these types of weeks. So 30 and 60, whether you took it at 30 or 60, it's okay. You're limiting your exposure and you're allowing yourself to be profitable without demanding too much. Because demanding too much, especially too early, can put you in bad situations when you don't understand conditional awareness and that takes experience. But then once it came all the way back down, think about what I used to be flexible. How was I able to be flexible and think, okay, well, guys, we're going to short now, or it should, because that's how I word it. I don't say you should or shouldn't do anything, but I said this should go lower, and it should offer an opportunity from the first presented fair value gap. Again, shout out Emmanuel, right? One of my students. So I didn't mention it. Well, I had the fair value gap. I didn't mention it was the first presented, but it was. That makes this even more significant. Think about this. This first presented fair value gap here, it's aligned with a quadrant from that 4 a.m. to 6 a.m. Pacific Standard Time range outline that ICT has been teaching. See how everything converges? It's not just these levels. There's a PD array that aligns with these levels at the right time. So price being what we've just outlined here in a macro. You see how all this stuff converges and then offers you a good opportunity? I mean, same thing happened in here too, right? This is a mitigation block, right? If we drag that to the left, we have the midpoint of that range. So that offered buy side. We also have a buy model, okay? Targeting the highs. We also had the retracement into this, starting to continue to rally, right? On the 1 hour. Okay, so right up in there. So on this candle here, when it was looking like a bullish candle. And then eventually it closed obviously lower, but it's okay. But do you see how these things converge? Do you see all this stuff? How it layers on top? It's not just one concept or another. It's all these things together and being able to be patient and wait for them. You know, there's a breaker in here, right? Low, high, lower, low. Retracement. If I take this breaker, the down movement, drag that over to the range we outlined, it's smack in the center of this quadrant, right? This whole breaker idea. You know, if you were going to go short, I personally would have needed to wait just because of those highs up there, which we did. But nonetheless, then you see this displacement here. Then we get the secondary return into that breaker, and the price goes lower. Smart money reversal at a significant PD array at the right time, 650 the macro, right? A lack of intermarket relationship agreeing though, so that's a red flag. But nonetheless, this is another perspective you could have had. Or you could have waited like I would have for this fair value gap here that was holding us bullish to now invert or reclaim bearish by closing below it with this displacement. We saw buy side, sell side. That is creating a market maker sell model. This is accumulation. So now that we got below it right here, and we have first presented fair value gap, and it's aligned with these quadrant levels, and we're at the right time, that offers a short. Aiming for what? The regular trading hours gap, which I told you guys would be my contingency if buys were to fail. So we had a noose around the market this morning, which is generally the case. And the more data we get, the tighter the noose gets until we get to a point where we could just yank it, right? And pull the trigger when things completely align. This process of doing things, layering confirmation, and then understanding what it is that we're looking at in price, because I've done this for so long, is why I'm able to do what I do, what you see me do. And it's things that I'm sharing with you. So then eventually, you know, if you give it enough time and effort, maybe it can happen for you too. Maybe you can say deep in your heart that you can come onto this chart any given day, any hour, because every hour there's a setup. It's power of 3 every hourly candle. There's a first presented fair value gap on every hourly range. Many times there's market maker buy and sell models happening on every single candle. If you go to the, you know, take the hourly and break it down to the 15 or 5-second chart, almost every single candle, if there's a power of 3, think about it. This is what power of 3 does, right? Right. If every candle, we're expecting this to happen. Okay. If every candle we're expecting this to happen on, if this is like a 1 hour, right? This candle here, if that's a 1 hour candle and this is what we're expecting every hour, or going the other way, doing the same but reverse. So like this. We have like a bearish candle, right? If that's what we're expecting, if price goes lower to go higher, what have I said you guys should be thinking about? If price goes lower to go higher, what should you be thinking about? What should you assume, because it's a fact, that price is always going to do? I've said lower to go higher, or any hour, any time interval, you consider power 3 dynamics. Just take the open of whatever range you're trading in. If it's an hourly range, 15-minute, 4-hour, daily, weekly, quarterly, yearly, 5-year, doesn't matter. You take that open and you anticipate these characteristics. It's not always going to be picture perfect, obviously. Sometimes it'll barely have any manipulation. It's just the way it is. You're going to miss the move potentially. It's okay. But if you go in there and you think anything that goes lower to go higher is a power 3 or a market maker buy model, because of the detailed components, these frameworks, because that's what they are, because of the detailed pieces of the frameworks that we talk about from power 3 and market maker models, and the fractal nature in these concepts. So every single candle that's being formed, every range that's being formed, you could find these characteristics. Because that's the case, the amount of opportunities and context that you can build, if you can simply determine what the overall direction is, like where we're reaching for, you can quickly start to observe in your back testing and over time that you can make an argument for setups constantly, all the time. There's a reason that I'm able to come in here every single call, every week, every day, and show you there's a setup here that makes sense to me. It's going to go here and it goes there, right? And when I get it wrong, it's okay, because I just reset the framework. Okay, maybe I got it wrong going the other way. I'm going to just look to see if there's anything that makes sense to go the other way. And as long as it fits the narrative and it makes sense, right? Like maybe it's a retracement in a bearish trend that I took a loss on and it's retracing bullish. Okay, great. I'm going to look for bullishness with these things in mind until we get to a logical level on a larger time frame that I can then justify price continuing to go lower on. Same thing's true if we flip it the other way. If I'm trying to buy and we're in a retracement, okay, I just look to go short until there's a logical PD array on a 1 hour or 4 hour or daily chart that gets met and then starts to push us back to the upside. Until that point, I can frame out a power 3 going bearish, a market maker sell model on a lower time frame, because if it's going higher, say it's a daily chart and it's retracing like this, there's still little baby consolidations in here. It may be a low. The price may have to trade down into as it reaches for a PD array. So then it can start its move back to the upside, find a change in state, and that's when we'll know we could get back in line with the normal narrative and get away from the retracement perspective. So I can find a setup in everything using power 3 constantly, because I'm more than sure that there's a bearish power 3 that'll happen to get us down to this level. And I'm more than sure that once we get down to that level and it starts to react, that we'll end up getting a bullish power 3 going the other way. If I have a bearish power 3 going lower for the retracement on a larger perspective, I know there's also a market maker sell model because they work together. They're both going higher to go lower or lower to go higher. They both have very particular details and they're both working on top of one another. That's why these two things I push you guys into and I teach about them the most. Because if you can understand the fractal nature in this, you have no idea how much opportunity is in front of you. And if you can use one model coupled with these frameworks, again, you have no idea what has been in front of you this whole time. But your perspective has not been pulled to it because people on social media are stupid. Okay? These people think they know, but they have no clue at all what they're talking about. It's annoying because then I got to clean up, because someone comes here and they see the clarity. They're like, shit, I learned wrong the whole time. And then I got to fix their problem, right? Like the mentors' issues that they've imposed on the students that are struggling. And I love it. I love doing it. I just don't like the fact that people are talking about things that they have no idea what they're talking about, giving this industry a bad name. I can't stand it because I was a victim of that type of BS. And it got me so mad that once I got consistent, once I got clarity, once I've been able to do this that I show you guys I'm able to do, I just figured, yo, let me try to go make an impact. Let me try to help people that were in my situation who may have been trying to trade and getting beat up. They know that it works. They, trust that ICT's concepts work. They're not going to quit, right? So let me go try to fill that little area in this industry, and then have fun sharing, what I already know as well. So I enjoy it, but I just can't stand these idiots. So if what I just talked about, what I just highlighted, go back and rewind it a couple times and listen to what I'm saying. I mean, I talk about this all the time, right? All the different components. I have a lot of nuance. You're still encouraged to watch ICT's videos. Got to give credit where credit's due. He's an absolutely spectacular mentor, right? But sometimes, reinforcement with a different perspective can allow for clarity in something that you've already been looking at, but may have had some concerns about. That's why what I do, there's a place for it. And that's why there's probably going to be a place for any of you on this call. I push a lot of you who work with me in my private group. If you get to a point where you know what you're talking about, the industry needs people that know what they're talking about. Don't let these losers who absolutely have no clue what they're talking about and only make money through course sales or whatever be the big popular people. If you have a passion for helping people, of course, right? I encourage you to think about it. And I'm not offended if you come out and use things that I've taught. I'm not offended. Okay. I mean, I had to get taught from somebody. I didn't create these concepts. I've discovered some stuff that most people don't know about them. But ICT and, the things that he's taught, there's things laid there in front of you for you to go discover. So, don't let that be a hindrance. I would cheer you on. You guys see, I do it all the time. I have a student named Harley, who's spectacular, fastest learner I've ever worked with. Harley trades on YouTube. Go check him out. I have a couple other that are in the chamber loading up, right, to do their own thing, just getting some stuff situated before they go ahead and do it. And of course, you want to have your confidence because you don't want it to be a hindrance if you get stage fright and then feel like you have to keep up because of people on social media. I have no one to impress. I impress myself with the life I live, and the markets, you guys seeing what happens here. If you're impressed, great. If you learn something, great. If you're not, there's a bunch of dumbasses you can go follow that aren't going to teach you properly, but they're more entertaining. So, there's got to be winners and losers. So you're not going to be able to save everybody either, which was kind of hard for me to come to terms with, but it's better now. People that see the value, they'll stick to you. Your personality will sell, and everybody has value, right? No matter how much skill set you have. Obviously, there's enough people that don't know what they're talking about coming on social media to claim they know what they're talking about. So you don't want to be one of those people. But even if you're going onto YouTube, and the way that you're going to start a YouTube channel, start your journey to helping others and passing the blessing forward, is to go onto YouTube and share your journey from the start to finish. I wish I would have done that and documented my stuff publicly. I don't really have stage fright. Okay. Some people do though, so maybe it's not the best idea. So only you can decide that. But I think that's something admirable. If you do have the cojones to come out here and the skin thick enough to not worry about what people say about you, and you have value, or you have good intentions, I encourage you. YouTube's fun. You get to meet some amazing. I have some of my best friends in my life that I've met from being on social media, right? I have people that are more loyal, just better people that I've met on social media through my teaching, through doing what I do, um, than I've met in my personal life, right? Maybe it's because I wasn't really around the best people, but I mean, this could be a good thing, you know? It could be a good thing. It could be helpful to you. It can also be a hindrance though. So just, you got to be careful. You got to know you, right? Let me see, Emmanuel. Oh, dude, I look forward to that. That's going to be amazing. I'm too busy watching. I mean, you can make pre-recorded videos, share your opinion. That's another way to do it until you get ready to, go off on your own on live calls. I have a student named Nico who's on his own as well. He used to be on the live calls all the time, but he's got enough, right? He's found enough. He has enough. He doesn't need to learn more. He can make decisions. He trusts what he's doing. He will take losses. He doesn't care. He shares it. He's transparent, not bothered by it, because you shouldn't be, you know? But he's went on to do his own thing as well, right? But you can, of course, start with pre-recorded reviews, right? Just review what you did, right? If you took executions, show that you took executions. If you took executions and lost, show that you took a loss, and use it as a journal. And just remember, there's going to be stupid asses on social media who are miserable, who can't do it, who hate to see people succeed and want to drag you down. There's going to be those people. That's what you invite when you go public on social media. So just be ready for that. If this is something that you want to do, I encourage you to do it. It needs more. We need more people that know what they're talking about, or at a minimum are transparent, that don't sugarcoat, because students, just like all of you, need the reality to be talked to them, including myself. I wish there was more people other than one person that I discovered who was ICT that spoke from this perspective. I wish there was more, because it would have saved me so much unrealistic expectations and just nonsense, Look at this move that we gave out. 100 points. It's just wonderful, right? Like, isn't this fun? Isn't this just like amazing? Like, we do this every day. Yesterday, day before that, well, it was Sunday, the day before that. Like, students like Emmanuel, right? He's in my private group. Am I lying? Am I lying? Am I amplifying this more so than it should be amplified? Any of you that are in the private group, right? Let me hear your opinion, right? Let whoever's new who watches this replay hear your opinion, so they know that their time is well spent here. I'm not one that'll show you Lambos. I'm not one that says, oh, here, look at my bank account. I've shown it a couple times, right? Recently, my $8,000 day I just had. But that stuff's not, you can't spend my money, right? And that doesn't do anything for you to see what I'm doing with my finances. Is the chart doing what I say it's going to do? And can this be transferable knowledge? Can you find something that you can use that can make you better? That's all I'm here to do, is give you those types of things. I don't care if people think I'm the greatest. I don't care if they think I'm the worst, or, think I'm boring or whatever. I could give a shit less. Okay. Really could care less. I'm here for those that need the reality spoken to them, want to have someone that's level-headed, that treats trading professionally, who can prove that they can actually do it. And if that's the type of environment you want, that you would enjoy being around, then you have a home here forever, as long as I'm, doing these videos. And yeah, so Emmanuel said, if they have a problem with me, text me. They probably text me. If you don't have my number, you don't know me well enough to have a problem. Yeah, he should add, or have an opinion of me. But that's a fact. Tom Holland, it's pretty nice. I was about to say Tom Hogarth. You guys heard of that guy? I don't know how he lives his life trading the way he does. It's nuts. It's just overwhelmingly risky. I don't know. Maybe there's some other people that are more aggressive. It's pretty spectacular. See $100,000 trades, but he's risking like 30% of his account. Like, that's crazy. It's nuts. Guess it's a definition. You got to risk it for the biscuit, though, right? To each his own. To each his own. Hey, man, so you're the real deal. I appreciate you, brother. Shoot, you're on your way to being the real deal too, bro. Yeah, it's wild, Emmanuel. He's actually been around for like 20 plus years doing exactly what I just described. He got a following by being this type of aggressive, wild trader who has been able to succeed. He loses a lot, but his winners are massive. They're massive. Like, and that's the thing. You know, he doesn't, I don't think he overtrades, over leverages. Well, over leveraging, definitely. But one person's over leverage is another person's small leverage. You know, some people go in with different ways of viewing it. It's just a testament to the fact that there's always going to be a unique way of doing this. You know what I mean? But yeah, so hopefully you guys got value from some of the stuff we've been talking about. Again, we already called the trade setup. I'm not one that's going to come in here and call 500 trades. I mean, a lot of times we're calling 5-6 trades in my private group per day. But we have one that is a banger. Sit and resonate with it, right? Like, sit and enjoy being correct. Yeah, you don't got to look for something every 5 seconds. But if we were going to play devil's advocate, okay, when price is going lower like this, remember my target was the midpoint of this regular trading hours gap. We can see price drop lower here, right? So displacement. Actually, there's a swing high here. Let's zoom in a little bit. So let's talk about continuations, right? If I didn't execute this and I was still relying on this being a move, completing the market maker sell model, we have this displacement lower. We have that wick. I would have preferred to see it stay inside of that, but we got price running up above this fractal high. So that's a stop run. So we got low, high, lower low, return back into the lower sell side delivery here, being a breaker. So that right there is a breaker. Okay. Bearish breaker. It's also buy side delivery, sell side delivery. That's a order block. We got an inversion fair value gap. That fair value gap there. It's at that lower part of the range, right? That's still part of the quadrants in this range that's outlined. That's still part of it. And that aligns beautifully with not only this breaker I just showed you, but the inversion fair value gap. Price breaks down through it, breaks down one more time. Maybe you didn't trust it right there. Breaks down, comes back up one more time, bang. Okay. You got this order block, price breaks down through it, comes back into it. Does it respect the lower 25 to 50% when we trade into it? I'd say it did. So that's a micro entry continuation, right? Different ways to view things. This delivery in here, right? We have this wick. Price breaks through, right? After it delivers this, price breaks back up into that wick. It's also the up delivery. So that's one order block, I'm sure, if we were to move up a little bit, right? That's from the seconds chart we just looked at. So if we're looking at it from a little bit larger time frame, it looks even more clear, right? Buy side, sell side should be a balanced price range. We have a high, low, failure swing, breakdown. This last down candle's range, that's a mitigation block because of the failure swing. Breaker on the 15-second, mitigation block on the 30-second. Breakdown, comes back, respects it, breaks down, comes back up into this, rejection block, breaks through the rejection block, comes back, treats it as an inversion. Price then drops, comes back up, treats this as a bearish order block, the middle part of that wick, respected, comes back down. Price runs up, hits that as a bearish order block again, still hasn't justified price going higher, right? Took the stops. Nothing has justified price going higher yet. at least up to that point. So then it breaks down again. So low, high, lower low. From this down close candle delivery here, multiple, you take that whole range, drag it over. That in itself is another breaker. Remember, our target draw on liquidity is down here. So we already have the draw in mind. Okay, so very important. We're not just winging it at any order block or whatever with no context. This has context that we've already outlined. And I'm just showing you with that context, sticking to that context, this is how you go in and look for continuation over time. You have to go in there and study like this. What I'm doing right here is something you should be doing every day. Go in there and study how a run on liquidity, reaching for a level that you can reasonably say, that's what it reached for. You take the range, in this case it's bearish, and you look at every PD array that you could find. You may not see certain PD arrays. Go in there and find the ones that you can see. If all you ever understood was order blocks, fair value gaps, breakers, and the relationship the price action has to the wicks and how it needs to respect the lower 25 to 50% if you're bearish, or upper 25 to 50% if you're bullish, anytime it trades into them. If that's all you ever understood about PD arrays, I mean, that's so powerful. Like, you have no idea. Like, you could go in there and only use those things that I just mentioned and be able to determine continuations, multiple setups. Obviously, you want to have context, price-wise, and timing with the macro. So the best opportunities are going to come from those moments as well. The macro goes all the way to here, right? So all these things in here were justified, with our main target being that regular trading hours gap. Okay, you notice that we're in this breaker right here. So I'm actually going to take that order block off. I'm going to actually drag this out right here. Let's see how that's treated right there. See, so we're in 7:30, so we're midway through this hour. So yeah, I hope that what I just said makes sense. I hope that you really internalize that and go into your chart and study this all day today, or however much you can. Keep this stuff in mind when price is moving. You got to look at the wicks, the order blocks, and fair value gaps, and whatever other PD arrays you can spot. But that little basket, including the wicks and how price, when it trades into them, what levels are respected, right? So if you break it down like this low to that high, say that's your whole order block, the lower 50 to 25%. If you're bearish, it needs to respect those levels if that's a PD array that's going to be useful to continue going in whatever direction you're anticipating, okay? Very simplistic, I hope, to understand. It's not rocket science, but this is identifying real order flow, right? I mean, it's beautiful. It's very simple. It's not overly complex. What I just described, I hope, is pretty simple. And if you guys have any questions, just let me know. I'm here to help. Again, if you guys do get value, don't forget to like the video if you haven't already. If you haven't subscribed to the channel, but you've been getting value, showing up every week, if you could subscribe to the channel, it really does help a lot. And tells YouTube that we're worth listening to. I think we're worth listening to. I don't see any real people with big followings doing even half the stuff that we do in terms of precision and consistency, calling price where it's going to go, and having the clarity that we employ. Outside of ICT, I mean, even in the ICT camp, there's really, really small handful of people that I know have the type of clarity that we have, right? So it's the reality. Don't like it? Too bad. Prove me wrong. So yeah, now that we're down here, okay, we do got that strong breakdown. But again, we're inside this breaker, so we got to see how this is going to be treated. We have buy side, sell side, buy side. That, if it's going to be bullish, it's going to have to give it up here and go higher. If it starts to break through this candle's low, I'm confident that we're going to take these out. And so we'll look for shorts. And then the dollar should, in that case, create a market maker buy model going up to the upside, targeting the highs up here in this fair value gap, which we could put the quadrants in. Okay. So we'll keep that in mind. If the dollar's bearish in here, we're below that fair value gap low. We also have buy side, sell side. We also have buy side here, sell side. That is a breaker. So if it's bearish, we should not come up into here. We should stay in that lower 25% like we are already. Look at how precise that was in that fair value gap that it traded into before it went lower. To the tick. And then we get displacement. That's not screaming to me that we're bullish. That's screaming bearishness. And if that's the case, and that's what happens, and it holds there and keeps going lower, you know, delivers the market maker sell model, and then continues that larger one, because this is the second stage distribution, remember? On the daily chart. But here on the hourly chart, we have now a smaller fractal inside that little black candle, the lower, somewhat indecision candle in here, favoring bearishness. Right, we're in that lower part of that fair value gap, and then we now got below this. So if we are going to continue the sell model on that daily chart, if it is going to keep going bearish, we now have that retracement that we looked at right here mapped out now as a market maker sell model with relative equal lows. Okay. You see that? Accumulation, origin, smart money reversal, low risk sell, may get first stage distribution here. So if you take the low candle right there, drag that over, it should be very sensitive. We have high, low, failure swing. That last down candle is a mitigation block if it's going to be bearish. If it violates it, then again, it's telling us good information. And if we get above this high, it's probably going to dig a little bit deeper. Maybe we come into this. Okay. But for now, given what we see, we got to go with what price is speaking to us. It's retracing into these up deliveries here, right? These up candles. It's at the low of that higher time frame fair value gap on the daily chart. See that right there? So if it's going to be bearish, it should be very sensitive here. Remember, I don't want to see it go much further than this, because over here, right, with where price is at, I don't want it to go further, because we're in accumulation right here to distribution in this big market maker sell model. So ideally, what the characteristics we see is this is going to go target these lows here. Okay, these equal lows. And with that being the case, if it does happen, the indices are reverse correlated. All of this should turn around, right? And all this was used for is to reach down to this breaker. Look at the beautiful response. We got a type 2 dealing range now that we're above this candle's high. We're staying above the upper 25 to 50% of the regular trading hours gap. It traded to it, but we're back above it again. So once we get back above it to the upside, if dollar keeps going lower, for the rest of the session, my attention is going to be up here. And guess what? There's relative equal highs up here. Isn't that lovely? Isn't that organized? Right? If we do end up getting back up there, right? Assuming that this holds and the dollar goes lower. Isn't that just super organized? And again, if this fails to do that and we get back below and it starts rampaging lower, then we got the rest of the regular trading hours gap to target. But because we have high, low, higher high, this should act as a bullish breaker. That bullish breaker on this 30-second chart is actually the low that's in here, inside the 1 hour bullish breaker. This is the fractal nature and price. This is layering your approach. This is where clarity comes in. Okay? Because I don't care what it does. We will be able to determine what it's going to do. It may take a little time at times, but it's not going to escape. Okay? tie a noose around the neck of the market every single day, right? So yeah, this here low high failure swing. It's not only a breaker with this high low higher high, it's also a high low failure swing. So if it is going to go higher, it's going to stop here. It has to. Now, if we get below this, then we have to consider that this run up was fake. If the dollar was to rally with that happening, then again, the regular trading hours gap low may have to be considered still. Okay. We're not in a macro yet, so I'd be waiting anyways. You see how the Dow got above that, coming back below it? So depending on what this candlestick does here for the rest of the day, that's going to determine what I'm going to do tomorrow, or how I'm going to view the Dow tomorrow. So we got a big wick up here that's now rejected. So we failed to try to get above the daily order block here. If we would have got above that, that would have been a really strong telltale sign, especially tomorrow if we open up, run lower into it, and then start to push away, creating bullish power 3 from the daily order block. That would be very nice to get us to go up. Yeah, went into the silver bullet and reversed. That's a risk because there is a continuous repetitive signature when it comes to the silver bullet, 7 a.m. PST, 10 a.m. Eastern time, the silver bullet window. There is a very common thread where that first 30 minutes is accumulation manipulation. Then once we get into the silver bullet time window, you get a 7 a.m. / 10 a.m. Eastern reversal. I have one student that actually uses that model. Shout out Sean. Right? And it's very common, right? Especially because the first 30 minutes of any opening range from the open price, 30 minutes out generally is going to be accumulation manipulation for that session power 3. Okay. So you want to keep that stuff in mind. That's why it's best to wait until you're comfortable with trading that type of condition. You got to wait, right? Let the distribution come into play. Many times that 7 a.m. provides you with that distribution. I've showed you guys an indicator that I created that tracks that along with, a couple other time elements. But you guys see it happens all the time. And 7 a.m. a lot of times is when they distribute. So very interesting stuff. Okay, so now it broke through that. So again, because there's no macro time here that we're trading within, this is not a viable, reliable, in my opinion, PD array to try to see price go up. If I'm looking to buy, I would like to see how this is going to treat that high. Excuse me. So if this can be a stop run that runs us up here, I would really like that because again, we're still inside that breaker on the 1 hour. We have shifted market structure here on the 1 hour. In order for me to trust that shift, it's going to have to close below that. We do have one change in state on this 1 hour chart as well, the order block being traded through. So if we can get another candle that comes up, creates another order block that takes it out again. If I'm not comfortable with one change in state, I wait for a second change in state. So I get double the confirmation so I can be sure, have a pretty high level of certainty that initial change in state followed by the second one now fully confirms that price is in fact going to now change state of delivery. Right? We also have a fair value gap that inverted, shift in market structure, possible change in state. So multiple things at in one area, at a PD array, at a balanced price range, buy side, sell side. But again, the dollar, we have to consider what the dollar is going to do. And we're inside of a bullish PD array. So it's going to have to make a decision. What are you going to want to do? Because we're at that daily level. Did we break through that daily level already? No. We're at that daily level down here, the daily fair value gap low. So that's way down there. Came up. And it looks like we're trying to contest that a little bit. If we go to the 15-minute chart, right, we could see the response off that and this regular trading hours gap has resulted in us kind of being in somewhat of a range, right? It's pretty busy in there, I know. Move that over a little bit. So I did point this out as well. I said if it does break down, wouldn't be surprised if they take that out. But if they take that out, that runs the risk of this being a market maker sell model now to give us continuation to the downside. Again, this is accumulation. If this run higher is going to go lower, got this range in here, this high to that low, but more specifically, this last down candle right there. That range is going to be important. If this thing gets up into this level, it's now invalidating the sell model. And if you take this high to that low, if we were to end up beyond 50%, that is a protocol I call the market maker model flexibility protocol that allows me to be confident that one is going to fail. So I got to get in line with the other one. And it kind of narrows things down and puts you in line with the second stage distribution of the, in this case, a buy model instead of a failed sell model. I've talked about this before. I'm not going to go too deep into it, but it's just another reason why the market maker models are so great. So yeah, we're clearly at this point, up to this moment, for now, respecting this level. We're kind of trapped in between this perspective and the 1 hour bullish breaker. So a lot of times when I'm stuck in between something like that, I like to go to the higher time frame. So we can see that that 1 hour breaker is actually a 4 hour bullish order block. See that 4 hour order block. In order for this to fully be justified that this is not going to use the 1 hour breaker or the down close candle here as support to go higher, in order for us to fully confirm that, I would really prefer that we get a closure below this. We also have an inversion for value gap here too. So, you know, we have not closed yet. We still have 3 hours in this 4 hour candle. So wherever this closes, if it closes below this inversion here, then that confirms it as an inversion, and then this will probably fail, especially if dollar was to rally. But if it can't close below that and we close up here, then this is more so likely that it's going to use this 4 hour bullish order block, especially if dollar continues to drop in the narrative we've discussed. Let's make this more clear. So this thing's going to have to stay in that lower 25 to 50%. And if we can keep getting this thing to go lower, which it looks like it's doing, then we will continue to try to see lower prices take place. And a market maker sell model should result in this 4 hour bullish order block, 1 hour breaker. Eventually get us up to the midpoint up here. If we get up here, we've now built the narrative to get us back in line with buy side delivery. Okay. Look at this. The previous regular trading hours gap. Lower 75% or 25%, however you want to look at it. Lower quarter. Drag that over to the tick. That is, I love seeing this stuff. It's amazing. It just proves that it's algorithmic. There's a logic that you can track. You just have to get used to tracking it and what you need to look at. Is the SB. SB. What do you mean by SB? My brain's not working right now. Suspension block, I think. Is that what that is? But yeah, we're inside of a weekly suspension block too. We talked about that earlier. It's right here. Is that it? Yeah. So the midpoint of that weekly suspension block is right there. And look at where that's at. So we're tapping the midpoint of that weekly level that we saw. Like if we go to the weekly real quick. Right, this whole candle from gap down here up to the gap up here, because there is a little gap in there if you see the little separation. So we're smack dab in the middle of that right there. And we have a 4-hour bullish order block, 1-hour breaker, bearish dollar. At least it looks like it's going to be bearish. So I think that we should be able to hold this, maybe even get this thing to go up a little further. That was earlier pointed to the silver. Oh, okay. That makes sense. Yeah, see, my brain's not working. But yeah, so let's see what happens with this. Okay. It's beautifully offering stop run, like I said, could be the case. Now we're above this fair value gap, so we get a stop run, inversion fair value gap. If we can get another order block to form here that trades above it, I'll classify that as a double change in state. And then I'm going to want to see these upper levels get taken out. Let's go 30-second. So I want to, it's not ideal, but it's probably enough for it to then get up here. Yeah, the other ones are doing it too. Dollar still looks like it wants to go lower. Still hugging the bottom of that. I don't like how slow it is, but that's just the way it is. So yeah, my attention's up here. Okay. Yeah, this will probably be the last call out in here. And then we'll call it a day. I think we've had a really, really valuable session today. I appreciate all of you guys that have liked the video, that get value from what it is I do here. Appreciate you giving me the opportunity to share what I know, because I think it's very helpful, right? And I like answering your guys' questions, because I had a lot of the same questions. I just, thankfully, over the years, I've been able to find the solutions. And now I get to share them with you. So yeah. So we're right above this green box in here. That is the accumulation. So if we get outside of that, that's the lower candle. If this was going to be sincerely aggressively bearish, the ideal scenario, say I was trying to swing trade this to go lower towards the lows. Ideally, I wouldn't want to see it come all the way back. I can tell you for certain. Oops. I can tell you for certain if we get above this little fair value gap in here, that will be a very nice area to look at to then send price higher again. Getting into that fair value gap, if we close outside of it, that's what we're going to require. If it doesn't close outside of that, as long as it doesn't breach this high here, if it starts to dump lower while leaving that high intact, while not closing outside of this fair value gap, we'll be reacting from this. And if dollar was to go higher, you know, it may look to try to give a little bit more of a decline. But again, this is pretty nasty in here. I'm trying to weigh out factors to see if it has a real chance to get up here. Do have buy side, sell side. That's a sell model that was completed. It's like a little micro fractal. We have a sell model that happened in here, could have framed out. We had a sell model in here like we did frame out. And then we came all the way down to the relative equal lows here. Dollar is coming back a little bit on the higher time frame. So that may give this thing a little bit of life. Got rejection block in here. We have the wick being traded into and respected and closed well above the midpoint. After taking stops, this is inside that 4-hour bullish order block, which is this level here. Okay, that black line. We're above the midpoint of that regular trading hours gap. So if we can stay up here and hang out up here and maybe even eventually get up here, then that would put us in position to take out this buy side up here. And that's actually London's high. So London's high, something I didn't do this morning. We got London's low here. So what liquidity has been utilized? Well, previous day's high is over here. So previous day's high, previous day's lows down here. We ran up above previous day's high. Also, we took out, well, attempted to take out London's high. So we took out previous day's high and then looked to come down and take out current day's London low. So those are the liquidity pairing that took place. Previous day's high gets swept and then London's low from overnight got taken out. So triggered in previous day, take out current day, right? Use it as counterparty. That's at least what's happened so far when we're talking about liquidity mapping and order pairing, at least from what I can see. And then all the other stuff that we've talked about, all the different minute details, you know, this just kind of lays over top of that order pairing. We just, you know, define things very, very detailed. So yeah. So yeah, do you guys have any questions? 15-minute or 15-second chart. Let's see. We're now in time distortion. So with this being the case, I think it would be a good time to call it a day. We've been on for almost 3 hours. But again, I hope you guys got value. Again, we called out 2 gorgeous trade setups. I talked about the narrative here. Why the hell is my thing deleted? And I talked about that setup here. I guess on a different markup. I don't know what happened to it. But you guys remember, first presented for value gap. So you guys remember I gave you that. Beautiful setup. I don't know why it's green. Gorgeous setup. Overall, this setup went 170 points if you held it. But you could have taken profit at 30, 60, 80, 100. Could have re-entered in here like I talked to you guys about. Again, this is why, I mean, it's unfortunate that people's attention span is not enough to sit and watch these types of videos. Because, I mean, there's numerous setups in here that I pointed your attention to, at least so you're aware of them. If I didn't point out these 2 setups, obviously we would have been having to consider some of these other ones that I talked about. And again, this isn't just hindsight, just because it went and I'm showing it. I literally engage these types of things every day, right? I only take 1 to 2 trades a day. But students in my private group, you know, if I'm not telling the truth, there's some of them that are on these calls all the time. They would call me out. So what you hear me talk about is really happening, as hard as it may be to believe. Okay, you just stick around for a little while and prove it. There's nobody else really doing what I'm doing other than ICT, but even he has his own little way that he's doing it. You know, I'm live constantly, every day, no days off. Not on YouTube, I'm only here twice a week. But in my private group, I'm there every single day. These are not just one-hit wonders that happen every so often. We are positioned constantly, managing risk, right? Keeping our mindset intact, calling the market where it's going to go, where it shouldn't go, making adjustments whenever necessary, teaching you how to make adjustments, what to look at, how to trust your trade setups, how to frame a trade setup. I talked about a lot of context building elements today, right? To help you justify whether something is worth taking a trade or not, whether it's something worth putting any effort behind. And again, the same financial advice. I don't encourage you to trade real funds until you're ready. Not because I tell you anything, because I don't even encourage you to trade real money. That's your decision. Okay. I trade real money, right? I show you my AMP account all the time, right? And the executions all the time. But I don't encourage you to do it until you're ready. And even then, you're not going to do it because I told you to do it. You're going to do it because you feel you're ready. And I hope that the things that I talk about have gotten you closer to that objective if that's something that you plan on doing. Or it's maybe funded accounts or, whatever. It's all attainable. And you could blow people out the water no matter what you do, no matter how big your account is. You can have a $5,000 account and then grow that thing slowly, doing what we talk about here every single week, a couple times a week, and maybe at some point every day. And all you need is time. Doesn't matter what you start with, time and consistency and managing risk properly. Do not let days get out of hand. Right? Never overtrade and over leverage. And I'm telling you, compound interest is magical. Okay? Especially if you come from a place where you don't have any money. You don't have anything to put at risk. Build the skill set. Try to go with the funded accounts. Do what you can with those. And then the main goal should be to get a personal account that you have full control over. But again, none of that happens unless you get structured and understand how to do this. And again, I hope that every call you guys spend with me gets you a little bit closer to that objective, whatever that may be for you. But with that being said, I guess we'll call it a day. Again, spectacular session today. Whether you took a trade or not, I hope that you actually learned some stuff at least, because that's the goal, right? And I hope you think I do a good job of getting you to learn. Okay, I think I do a good job. A lot of you guys constantly tell me the value you get, so I appreciate you. But yeah, we'll leave it there. Thanks again for all the love and support. Thank you to those of you that have liked the video, who constantly show up. If you haven't liked the video, definitely go do that if you get value. Spread the word, right? If you have anyone that you think can benefit from being in this type of environment, around this type of, mindset, and, you value the skill set, it's a blessing, not only to me, but it's a blessing that I have people I could share it with. So I appreciate you guys as much as you appreciate me. But if you have anyone else that you think could benefit, don't be stingy with it, right? Spread the word, have them come and hang out, and maybe we can help them as well. All right. So yeah, that being said, hopefully you guys learned some stuff. Let me know if you guys need anything. We'll be back live again here on YouTube on Sunday. If you haven't joined my free group, I encourage you to go do that. If you do want any extra help, one-on-ones, or you want to be part of my private group where we do what you saw here today, every single day, there's a link in the description, and there's a QR code over there at the corner of the screen you could scan. And if not, I'll see you guys back here on YouTube on Sunday and every Tuesday until I decide to stop doing this, which ain't going to be anytime soon, right? So with that being said, God bless you guys. Let me know if you need anything. And yeah, I guess I'll catch you on the next one. Have a good rest of your day, you guys.